Welcome to Cape Peninsula Capital. Today I want to talk about the technical analysis of Costamare. And as you can see, we have formed this very beautiful bull flag. So we have this very nice pull to the upside, and then we have this correction to the downside. And if you take a look at the pull, we only had one major setback, and this is also an indication that there was a lot of strength in the market during this upside movement. Now let's take a closer look at this correction. As you can see, if we compare this high with this low, they are overlapping. And this is also a sign that this movement is weak. And also, if we compare this high to this low, we can also see that this is a very corrective move because they are overlapping. Now let's take a look at the price retracement, because if you are trading bull flags, it's always important to measure the retracement of the move, because if it's too shallow or if it's too deep, it's not very probable that the previous move to the upside will be continued. So what you want to see in bull flags is that your correction is around 38 to 60% of the previous movement to the upside. So here we went to the 38 Fibonacci retracement. So from this perspective, this correction is sufficient. But not only the price correction is important, but also the time correction. And therefore, we take a look at the Fibonacci retracement of the time. And as you can see, this is around 100% of this pull, and you want to have the correction about 25% to 100% of the time of the previous pull. And right now we are at the sweet spot. So our correction is around 50 to 75% of the time. And this in combination with the price retracement is also a very sufficient correction. Just as an example, we can see that if we go back in time, we had also here a point where we went around to the 23 Fibonacci retracement. But this price retracement in a bull flag is not sufficient. So everything is about probabilities, and the probability is much higher that the correction would go on to the downside. Now let's come to the setup. So first I want to talk about the target. The target is the one-to-one projection of the pull, and this would leave us with a price target of around $21. Our entry point is a surpass of the price of $15.30, because right now we are in a short-term downtrend, and if we surpass this last significant high, this short-term downtrend is not valid anymore. And our stop is at around $13.77, because imagine our hypothesis is that if we surpass this price to the upside, this downtrend is not valid anymore, and therefore we are in a new uptrend. And this scenario is also not intact anymore if we surpass the last significant low, and this will be this point. So we have a very clear defined setup. So we know our target, we know our entry point, and we also know our stop. And now let's take a look at the risk reward ratio. So we have an upside potential of around 36%, and we have a risk of around 10%. So this leaves us with risk reward ratio which is about 3.6, and this is very good. Everything above 2 is pretty good. So as always, if you have questions, please put them down into the comment section. I wish you good luck with your trading, and have a nice day. Bye-bye.